Vincenzo's Gold Crypto Investing, and this is a live Fed meeting, and we're going to listen in on what he has to say and pay attention to the markets as he talks. So let's listen in.
The economy and the country have been through a lot over the past 2.5 years and have proved resilient. It is essential that we bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all. From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain to see. The labor market is extremely tight, and inflation is much too high. Against this backdrop, today the Federal Open Market Committee raised its policy interest rate by 0.75 of a percentage point and anticipates that ongoing increases in that rate will be appropriate. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. Overall economic activity edged down in the first quarter as unusually sharp swings in inventories and net exports more than offset continued strong underlying demand. Recent indicators suggest that real GDP growth has picked up this quarter, with consumption spending remaining strong. In contrast, growth in business fixed investment appears to be slowing, and activity in the housing sector looks to be softening, in part reflecting higher mortgage rates. The tightening in financial conditions that we've seen in recent months should continue to temper growth and help bring demand into better balance with supply. As shown in our summary of economic projections, FOMC
Jesus.
inflation down if we are to have a sustained period of strong labor market conditions that benefit all. From the standpoint of our congressional mandate to promote maximum employment and price stability,
You can see so far the markets have been highly volatile. This is a highly, highly tricky area to be leverage trading or to be trading at all right now in swing trades. We have markets, Bitcoin going up and down. We got the stock market going up and down, right? The stock market's been up 200 points, down 300 points, up 100 points, literally all within the last half hour. Gold is going crazy, up and down as the Fed raised rates, 0.75 basis points, more than I thought. But in grand scheme of things, it's still not going to do anything to help inflation. It's just going to beat down markets. But like I was saying, I could see a way where we could pump. And if we look at the charts live, you can see we're on this critical area where we're trying to double bottom. Bottom one, bottom two. This is a major, major support. And if you break this, this is a catastrophic break. Because if you look into the Wayback Machine, into the daily time frame, you can see the 2018 pump got all the way up here to 19,000. We're going to actually mark that for you. This is your critical support. It got all the way down here to 19,600 and change. And I believe it actually did maybe hit 20 grand intraday, right? But that's a major support area, and it's just below the skinny red line that it's been bouncing on, and it's trying to form a double bottom. So if you break that 19,631, there's major problems. But I could see a way that you pump now as you got your overhead resistance. If you look at crypto, you got your overhead resistance, this green ring right now. So you're stuck in between this 20,200 and the 20,900. You've been sort of trading within that since you came down. And that's your major resistance areas right now. If you can break back above that green ring, you can try to target up here, getting closer towards these moving averages, or even this top part of this white support box up here that we talked about earlier. And that's 27,933, right? And then you got the 200-day at 25,000. And then obviously that major 19,631 underneath support. And that's what we're going to watch out to see what happens today as the Fed continues to talk, right? And the markets continue to be highly volatile right now. They don't know which direction to go right now. They're pumping, they're dumping, seemingly all in the same minute time span. So this is a highly volatile market. Pay attention to what the Fed's saying today, right? The markets are trying to move based off that, but they're not sure where to go right now. They're pumping and they're dumping simultaneously. It's an incredibly volatile time. And you can see the stock market just going all over. Look at the stock market. It's just going all over the fucking place. Don't know what to do because it's there. Everyone's trying to digest today and figure out the turn of the market. But if it goes how it's been going, although this time they raised rates quarter basis point more than the market. Well, the market already priced that in though. So depending on what he says the next half hour, it could calm the markets down and allow a brief rally. But we're just not, we just got to get some more data in and see exactly what happens here. As you can see, Bitcoin is now starting to pump, right? See that? Bitcoin's starting to pump. Let's see what the stock market's doing. The stock market's starting to pump. Let's see what the dollar's doing. The dollar's starting to give back some of those gains. And right now, you could be on the pump side, right? And we're going to pay attention to this and keep you up to date as these markets all over the place. And you got to stay on top of this. And we got major support and resistance zones. You can see XRP is literally all over the map. It's been down, it's been up. And if we zoom out, you can see you're on top of that orange support zone that's chilling down here at about 29 cents. And your first initial overhead resistance, if you pump, is right up here at 38 cents. And then if you can muster through that, you can make a run all the way up here, right? And if you can get over that 40-ish cents, 45-cent, 200-day moving average, you can make a nice run all the way back up here to 60 cents real quick if you can get some kind of pump, right? If you can get some volume in and the momentum comes, you can try to make a run up into these areas. But I caution you, if you slip down, you're coming all the way down to the bottom part here. So this is a critical time on support and resistances, and we're going to pay attention to the Fed and see what this guy has to say and see how the markets react to what he has to say. Let's fast forward.
And financial conditions evolved in line with expectations. We also stated that we were highly attentive to inflation risks and that we would be nimble in responding to incoming data and the evolving outlook. Since then, inflation has again surprised to the upside. Some indicators of inflation expectations have risen, and projections for inflation this year have been revised up notably. In response to these developments, the committee decided that a larger increase in the target range was warranted at today's meeting. This continues our approach of expeditiously moving our policy rate up to more normal levels, and it will help ensure that longer-term inflation expectations remain well anchored at 2%. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 3.4% at the end of this year, a percentage point and a half higher than projected in March, and 0.9 percentage point above the median estimate of its longer run value. The median projection rises further to 3.8% at the end of next year and declines to 3.4% in 2024, still above the median longer run value.